Hello, everybody. This is Ken Winans and Stephanie Larson from Winans Investments, and we're hoping you're all getting ready for Thanksgiving Day and hopefully what will be a somewhat memorable holiday season. So we wanted to get back in touch with you. This will probably be our last video of the year, so we just wanted to make sure you all knew where we were at and what we're thinking. First off, let me get into some mechanical things. Now, many of you in the past have done things year-end, whether it's gifting, whether it's money movements or wires and whatnot. We're asking you, because of the problems we've talked about before, where things move slowly right now with the custodians because of COVID, please get those requests in early. I would actually recommend next week. If you really want these things done in the month of December, you need to get them done, get them to us next week. I would say anything after the end of next week, and we just simply cannot guarantee that it will be done this year. Other things that I will talk about. There are changes in the portfolios that we will make post-election, but we've elected to hold off on doing it until we find out, A, is the shift in leadership permanent, and also we just don't want to create any more tax issues in our taxable account. So we are deliberately holding back on some things. Also, quite frankly, I'd like to see what year-end numbers look like going into January and February. I would also encourage all of you, we've been asked a lot about post-election, our thoughts on things. If you haven't done it, you might want to go look at the article that we wrote in Forbes or on Forbes.com. It's titled, "Do the Winds of Political Change Really Affect Investing or Have an Effect on Investing?" I wrote it, supposed to be post-investment anyway, or post-election anyway, so I would encourage you to please go back and look at it. That is how we both feel. It's just, we care about the markets going up. Then lastly, as you know, I'm a technician and I'm a quant and I monitor the strength of the markets. It is my opinion that the patient is relatively healthy right now. The internal strength, the volume, money leaving Europe and Asia, coming into the United States, we're the least dirty shirt in the hamper, so to speak. So it's looking okay for people who are a little nervous about things. Now, as you all know, I'm a very big believer in the January barometer. January sets the tone for the year, as January did this year. For those of you who go back and remember, January was very volatile. January 2020 was very, very volatile, and alas, we saw what happened. So with that being said, Stephanie, what do you want to add?
Well, there's a lot. We're the same minds here. We are acknowledging the rotation that's going on within the sectors. We don't believe that tech's going to pull back all the way or, really let go of its leadership completely. Even if, COVID disappears and the vaccine's a miracle and kids go back to school and everyone's doing cartwheels in the streets again. And, I just don't see it happening. Tech is still going to be a fundamental part of the future. So we'll maintain our exposure to it, but watch it. Be mindful of the fact that it's been on this roller coaster of a rally, and we don't want to ride it down if it starts to actually go down. We're also really monitoring the bonds. So the bond market, if you guys have fixed income exposure in your portfolio, you'll see that I'm always playing with the portfolios, with preferreds, with the bonds, adding to it. It's kind of like a treadmill. It makes income, money keeps coming in, which means I need to keep buying bonds for you guys, especially if you guys don't touch your portfolios, which we appreciate.
Exactly.
But the difficulty in the market right now has been that it's so pricey. If you look at your latest statement, either from TD or Schwab or from us, you'll see that bond prices are really strong. The only weak-ish sector is energy, and we own as much as we want to and don't really want to add to it. So for us, it's really trying to find the right price of the bond that we want, that has the right yield that we want and that we're happy with, and it's just getting pretty tight. The Fed really stuck their nose in it, and when they said that they were going to start buying bonds and pretty much assured that they were going to continue with that, it just really made it a lot harder. Doesn't mean we can't find paper. We've been buying a lot. It just means that it's a lot more work on our end, but it's our job. It's what we do. So, but if you're having a major allocation change, just know it's going to take a little bit longer to get you fully invested, and the rotation's going to take a little time, but we're getting there.
And then preferred stocks are still a choice as far as yield goes. Yep. Still finding some big opportunities there. Just keep in mind, and I mean, we've said this many, many times, that look, we don't look at everything month to month. We look at it as a strategy. Yep. We look at it, I think quarter to quarter is even too much to look at things. So I know many of you are nervous about your investments, and I know the news is scary. I mean, we all know, even today, it's very, very scary about the COVID thing, but that's what you have us here to manage, and that's what we hopefully you're satisfied with our results. So I would just say, anything else, or I think we're kind of good.
I think for us, you know, and like Ken mentioned, for January, we're really going to pay attention to what happens January. That's going to be a major indicator for next year. For us also, we're going to be watching the retailers. I think a lot of the retailers have put all of their eggs into the holiday basket, and they're going to see if people will spend money and consume, and if they don't, then maybe next year will be a little tougher than we're all hoping, but we're hoping that they do, and it will be good for all the businesses and for the strength of their earnings. So January is going to be a real important month, and it's going to be how we tactically set up for the year, I think.
I would just finish on this. We really wish all of you, truly wish you a wonderful holiday season with family and friends. And you know, we were given Christmas early when Morningstar reaffirmed our 5-star ranking in all strategies. We are truly at the top of our game as far as where we are against our peers. And so again, we thank you for your business, and we will send you another video early next year. So happy holidays.
Happy holidays.